Hello, traders. It's Thursday, the 24th of May, 2018. It's 8 a.m. Chicago time, 9 a.m. Eastern. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. First off, I want to remind you again that we're going into a holiday weekend in the United States. A 3-day weekend. Monday is a half day on the futures market, and a holiday, a bank holiday, and a national holiday. It's an important one because it kicks off, at least in my area, it kicks off all the pool parties and the boats get out on the lake and all that stuff. So Memorial Day weekend is the official start of summer over here. So my expectation is that tomorrow is going to be a snoozer. So we're heading into that today. Just bear that in mind. Looking at the general quote board of the products that I'm tracking, it looks like gold's leading the pack this morning. Gold trading $1,298.40, up $8.80 or 0.67%, followed by the yen, the bond, the cable, the euro, the 10-year note, and the bund. Those are that's pretty much the laundry list of all the safety assets. So clearly the market's allocating to safety this morning. However, I can't say it's doing so aggressively. The S&P is only down 5 points, and Nasdaq's only down 9 points, which is basically less than a rotation for that product. The Russell's down 1.6. And then the laggard today is crude. It's trading at $70.83, down $1, which is 1.38%. So that's the lay of the land, the overview, the general overview. Let's take a walk on over to our plan from yesterday and see how that played out. Here's what was expected on the primary plan. The primary plan was for the market to test down, but generally looking for a responsive move into yesterday's low before we consolidate, and then was looking for an FOMC move either into the range, in which case, as I'd mentioned for the last few days, 3250 is big, and a potential move down, in which case the 2700 retest is likely to fail. A retest of 2700, last time we were here, we went to 2700.5, and a retest of that would put us into, this is a big low volume node, by the way. It's a century figure. Bringing us back to 2700 is likely to give us a weak low on a bigger time frame, and it's likely to push through. So that's the key idea. The secondary was an immediate push up, consolidate, finally get to the prior day's low, and then into FOMC. The difference between 2 and 1 is immediately responsive, the other's initiative, then responsive. In other words, they sell early and then they push back up. Here's what actually happened. I like that my 2-tick Renko chart, which I'm going to switch back here to 4. I like that it's filling up the page. It's filling up the screen. Wow, that's noisy. So this is our 4-tick Renko. When I bring it back to how it normally is, notice this day, the entire day of a 4-tick Renko, which is a range-based chart, range-based bar periodicity, it's taken up a quarter of the page. This is taken up a little more, and then yesterday in comparison had some really good rotations, up and down, up and down, up and down. So what we did yesterday is we opened in an open auction out of range. You can see a clear swing to 27.14, down to 27.10. Let's play that back. I cannot overemphasize the importance of playing back the day. There it is. Goes to 27.14, 27.10. So now we have our opening swing. We know it's an open auction. We break the opening swing high. So now we're bullish. And then it immediately goes and tests the prior day's low, which is this green line. The green line is the prior day's high or low. So you can see here, green lines from the prior day. This is from the prior day, and so on. The orange line is the prior day's close. The maroon line is the prior day's point of control, or the current day's point of control. So as we shift forward, we see it tested the prior day's low by a tick. What is the biggest clue that we pick up when the market does this? When the market goes and tests the prior day's low, I'll give you a hint. It's a day time frame level. If it goes and tests the prior day's low and responds, what kind of a participant are we competing with in the market that day? Who are the what is the time frame that is in control? Which is a question you need to answer consistently before every trade. Which time frame is likely to be in control, so you can understand how far your targets need to be. You can understand what levels are likely to hold or not. Which time frame's holding is in control here? Unfortunately, with a YouTube delay of about 15 to 20 seconds, I can't wait for your answer. It'll be dead air. But this gives us a big clue that day time frame is in control. What does it mean for day time frame to be in control? It means that we can safely fade initial tests of key areas. And my key areas are these stock zones, right? These are stock zones. That's a trademarked name. Okay. And so a first test of any of these stock zones for me is going to be an opportunity to fade. But the bigger trade, of course, is to trade with the trend, which is we open and we shift away from the open, and we broke the opening swing high, which is a legit opening swing high, a clear entry of the sellers, a clear entry of the buyers, and the buyers win. So we want to trade from the long side. But identifying that tells you, okay, with the short time frame in control, it means that I can trade from the outside in on virgin tests of my key areas or my areas to do business. But also it means that my targets need to be a little bit tighter. I've been using 2 points given the volatility on my first scale. So I'm back to 2 points. For a while I was at 3.5 to 4 points, which was great. And then your stop has to compensate. So here it goes. Now we get this sell-off. And we get a range extension down, and we hit that 27.0850 on the nose. That level was there from yesterday's stock zones. And knowing that the day time frame is in control, we have to be cautious with the mid. We like I said, we're likely to trade from the outside in, and we push and pull, push and pull. And as I discussed yesterday, remember this discussion at the end of the broadcast of the type of day that spikes all the way through. Oops, that spikes all the way through. We make a low, we push. Wait, we make a low, we push very deep, like a 80-90% retracement. Then we make another low, and we push very deep. And we make another low, and we push very deep. We were cognizant of that, and I said we have to plan for that. And that's essentially what we have. We make a new low, very deep pullback. Okay, so every new low is pushing this very big pullback. And this all changes, of course, at the FOMC. The FOMC announcements, 1 o'clock Chicago time, 2 Eastern. And now we expect that the day time frame or the short time frame to step aside, and for the higher time frame to step in and do their business based on the statement from the FOMC committee and its staff. We now have something else to price in, and that's what we saw. Boom. right? Now we're back in the range. So now we're back in the range. What are our key areas? Key area, low volume node. And this stock zone is about a week and a half old at 32.50. That's the key area. We take a pause at yesterday's close. Remember, the orange line is the prior day's close. We take a pause there. But the big thing here is if the market fails to get out of the prior day's range, then it's likely to test this low volume node. We test the high volume node, then we test the low volume node, then generally we pull back and we might go to the high volume node. And if we return to the low volume node, we're likely to push through to the next high volume node, which in this case is the point of control, pull back to the low volume node, then test the other side if buyers are still in control, test the next high volume node, pull back to the low volume node, pull back to the high volume node, and decide from there, or balance. Remember, that's from like webinar 2. That's from many, many videos that I've done and webinars that I've done for Futures IO and various others, explaining that that's the natural auction, is to test the accepted price, potentially consolidate there, the move to the extreme, test that. If it fails to push through the extreme, it returns generally to or around. Nothing's perfect. It's not really picture perfect all the time, or it rarely is, but it does do it. And what we'll have is an overlay and an overlay and an overlay of high volume node over high volume node over high volume node. And once it tests both high volume nodes, it tends to land in the middle and fill in the low volume node in between. So over time, I would expect it to go, pull back, push higher, pull back, and if it fails through, pull back, pull into the low volume node, and now it's tested the high volume node up here, the high volume node up here, and then what we end up with is diddle in the middle, consolidate, fill in this low volume node, and then from there we get the next move. That's the nature of the auction. You have to understand the auction. I'm telling you, if you don't understand how the auction works, and if you're not monitoring the volume at price, you're at a disadvantage. I don't say that lightly. So we get into the prior day's range and we test the prior day's low, okay? Successfully test it, and we got a pop. This was a huge opportunity. I narrated this. I talked about this in the Head Trader channel on Convergent Trading. I talked about the strong potential for it to hold this area, okay? And it's likely to, and then once it does that, then the target is likely to be 32.50, but it got that target too late in the day. So it managed to push into that target into the close. And if I don't have a position on already, I will not trade the last 15 minutes. Picture perfect test of 32.50, the next stock zone, the next gray area. Picture perfect, pushes through by 2 ticks on the 32.50 to 33. Just awesome. So that's what happened yesterday. Sorry, it's the long version, but I really want you to understand what how I'm looking at things, and how hopefully that'll help you realize that there's more to the market than a moving average crossover or a pattern or Murray math or whatever. There's nothing wrong with those things, but do understand the auction as a part of your day-to-day process of understanding the market. Always go back and replay the session so you can narrate to yourself and understand what the participants are trying to do. So we open where we close, we immediately sell off, retest the open, and plop. It pushes back. Where does it push back to? Yesterday's low volume node right here. The morning test was 21.25. The afternoon test was 21.25. That was the prior day's, remember, it was the prior day's low at 21.50. We pushed through by 5 ticks. Okay, pushed through by 5 ticks. We get our mid test and higher low. The mid test fails, caution, and explode upwards on the European Open right here. Explode upwards, and what we have is a high kurtosis, almost single price kurtosis print at the high, and that's our point of control at 27.32 even. 27.32 sounds familiar. 32.50 being a key level from from a week or so. It was yesterday's high at 33, and so on and so on and so on. This, ladies and gentlemen, I said it yesterday, I'll say it again. If there's a kid nearby, cover their ears. This is chart porn. That's what it is. I think I'm going to trademark that statement, actually, that word. But look at this. It's a beauty. Okay? I don't trade the night session, but it seems to be very methodical. Night sessions, or Globex, I should say, because it's only night to me. The Globex session generally is pretty boring, but lately we've seen some pretty good action. So today we have 146,000 in the Globex session, so it's pretty healthy auction, exceeding the most common volume for the Globex session. We have really good range, 27.20 quarter to 27.33 quarter. So we have 13 points of range. We have a profile that clearly shows that there was no consensus on value. Battle in various areas. We have a market that is methodical, and that's what we're coming into today. These trader bites are getting very long with my long-winded narrations here. So I'll cut it short and tell you what I'm planning. Let's cut this noise out. Let's cut this noise out. By the way, yesterday's volume, finally back to normal. Oh, man. We've been doing, look at that. Normal, or the most common is 1.1 to 1.1 million contracts in the RTH session. I mean, the day before was short by 25%. Despite the sell-off in the afternoon, it was short 25%. The day before that, it was short by about 25%. It's terrible. The day before that, down by 20 to 25% as well. And it's just, finally, it's we got some action yesterday. So we're opening in a range. We're opening below the prior day's close. The prior day's close is 30 1/4 up here. The market rallied with the point of control near the overnight high. Okay, very consolidated up there. The expectation is an open auction with a test towards the prior day's close. The overnight inventory is kind of mixed, but to the short side. I expect us to fight this area. I expect us to fail. I'm expecting a retest of 27.21 1/4, the prior day's low, and I expect us to get back into the most accepted area from yesterday for a target of the point of control, 27.1475 for bounce. Okay, looking at the calendar, there's not much that's in the way of the auction running under its own power. Existing home sales at 10 o'clock Eastern for April. Not all that important. But there's a parade of ECB. There's been a parade of ECB and Fed and BOE speakers today. Tons and tons of blah, 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 blah on my news feeds. So, yeah, it looks like crude is tanking. Look at this crude chart. Bam. Look at that crude chart. Just it's not really tanking, but it's definitely taking a hit. Pushing lower on pretty good volume. Strong rotation down just now. So keep an eye on that if you're trading. So that's the primary scenario. Secondary scenario, which is my less preferred, open auction out of range. Comes down, 27.21, battles, pushes through, consolidates, impulse up, and then we retest this 27.33 to push through to the 27.36 naked point of control. This is a responsive move to yesterday's value, which then starts to move up. Now remember, The big point of control, the big point of control is at 27.20, and we are trading around it. Okay, so there's a big point of control here. Let me turn on my master levels. There's a high volume node here I showed you yesterday, sitting right at 27.20, and it's a magnet, and so I expect us to twirl around it quite a bit. Anyway, I'm way over my time. I'll leave you with that. I want to remind you again that we're doing a public AMA next Thursday. Public AMA next Thursday. It'll be at 3:30 Central, 4:30 Eastern. I haven't done one probably in a year or so, and I need to open it up and for anybody who's not a convergenttrading.com member to ask questions if you wish to. Good luck today. Remember, if you're not minding your risk, if you're not defining how much you're risking ahead of time, you're just gambling. Also, if you're finding that you're getting smart during the trade, which means that you have a plan and you get in and then all of a sudden you're doing all kinds of crazy stuff. Once you're in, then you're just an impulsive trader. You're just trading on impulse. Do not change your plan. Your clarity comes before you trade. Clarity does not come after you trade until you're way more experienced and emotions are not driving your actions. For most people, emotions are driving actions. That's why you can trade perfectly on a simulator following a plan with size and everything else with the proper position size. But you go live and all of a sudden just crap hits the fan and it's no good. It's because emotions are taking over. So understand that you're like a drunk driver once you're in a trade. The brain's capacity to reason objectively is hampered somewhat. And over time you learn to accept that, you learn to be aware of it and plan for it. Good luck today. Take care.